Hey everyone, it's your bald LinkedIn here, where a brown bald guy gives you a daily dose of market news. Today, S&P 500 dropped almost 30 points and Dow by 240 points from a record, led by losses in retail, energy and financial shares. 10 years treasury yield slipped below 1.45% while the dollar rose. And this was mostly followed by the fear of tapering to be announced on Wednesday. About 20 central banks are due to hold meeting this week, with the Federal Reserve seeing winding down bond purchases and signaling an interest rate hike in early 2022. Morgan Stanley strategists did comment that we think the Fed's pivot to a more aggressive tapering schedule poses a larger risk for assets prices than most investors believe. Good news, supply is improving but will be arriving at a wrong time. As long as the Fed doesn't provide a materially hawkish surprise this Wednesday, stocks can rally into a year-end of momentum even if valuations are again stretched. Tom Essay, a former Merrill Lynch trader, we do not expect the Fed to slam on the brakes to choke off liquidity, but rather look for it to pump the brakes as lightly as it can as it takes the mechanism of the emergency stimulus off gradually, wrote John, chief investment strategist of Open Hire Fund. As per economists surveyed by Bloomberg, which surveyed 49 economists between December 3rd to December 8th, more than half predicted the Fed's quarterly forecast released after the conclusion of its two-day meeting Wednesday will show the median of 18 officials projecting 2 rate hikes early next year from current levels nearing to zero. Laura Roser, senior economist at Micro Policy Perspective, said that it's going to be the biggest hawkish shift in the history of the dot plot. Nearly half of the economists plotted said the surge, concern about the inflation at the White House, and Powell's renomination as the Fed chair have all contributed to adjustment in the stance. The forecast will show an increase in inflation, drop in unemployment, and massive shift in the rate hikes to 2022, said Daniel Swan, a chief economist at Grant Thornton LLP. Talking about inflation, former Treasury Secretary Lawrence Summer did iterate his inflation views on Twitter, saying that the idea that inflation will revert soon to level anywhere near the Fed's target looks like a long shot, and he sees no compelling reason to expect major de-escalation in inflation. Moving to our next story around Omicron, UK Prime Minister Boris Johnson confirmed that one person has died from the Omicron variant. China reported its first case of Omicron, where Australia reported its first hospitalization linked to the strain. Research from the University of Oxford published results on Monday from a study yet to be peer-reviewed, where they collected blood samples from people vaccinated with 2 different shots, Pfizer and AstraZeneca, and tested against the new strain, which showed a substantial drop in neutralizing antibodies, a proxy for protection, particularly compared with the Delta variant. The scientists couldn't yet answer key questions about the vaccine's ability to ward off severe diseases. The new mutation has sparked concern around the globe, but reports from South Africa, where it was discovered, suggest so far the cause appear to be milder than during the earlier surges. Teresa Lamb, one of the creators of shot that AstraZeneca developed with Oxford, said that Omicron's impact should become better documented in few more weeks, making clear whether new vaccines are needed. He further mentioned that we are hopeful that current vaccines will protect against severe disease and hospitalization, and that's certainly what we have seen before with other variants of concern. We and other vaccine manufacturers are in position that if a new variant vaccine is needed, we can go faster. Moving on to the crypto news, it's been reported that over 90% of the total amount of Bitcoin that will ever exist has already been mined as of today, according to the data from Clark Moody Bitcoin dashboard. Bitcoin almost dropped to 48,000, looking to breach its closely watched 200 days moving average at about 46,720, and Ethereum to 3,700. But Bitcoin did get a brief boost on Friday after a report showed CPI accelerated, supporting the argument that coin is a hedge against the rising inflation. There was a good opinion piece published by Aaron Brown, former managing director and the head of financial market research at ARQ Capital Management, who thinks otherwise, stating that crypto is an imperfect hedge against inflation and does explain it pretty well with the relationship between Congress, economy and crypto. I definitely do recommend you to give a 30-minute read if you are really interested in this topic. I'll link it in the description below. In other crypto news, Binance Singapore affiliated announced that it will withdraw its local license application and wind down its digital payment token business. Binance did not give a reason for its decision beyond strategic, commercial and developmental considerations, and it would reinforce the local global units operation on becoming a blockchain innovation hub. And moving to the last but rather funny one, did you know one of the Bored Ape NFTs was accidentally put on a market for 100 of its market price? The seller of Bored Ape number 3547 put the in-demand NFT on OpenSea for 0.75 Ethereum instead of 75 Ethereum, blaming a fat finger typing error. And now it's been listed at 59.99 Ethereum, which is almost $230,000. Wow, that's just mind-blowing. Well, that's it for today, guys. Hope you liked my market recap, and if you did, please drop a like and hit that subscribe button, and see you tomorrow.